Thank you, Sahil. First of all, I would like to extend my gratitude to Shafa and ICAP for being so proactive in organizing this AML CFT program for accounting sector professionals. It's a really unique, innovative, and new one. So I would like to congratulate you, and I would like to praise you again for having such kind of initiatives. At the same time, I would like to express my gratitude to ICANN, that is regulator here for accounting professionals, and especially to Mr. Suraj Kaple, sir, who really connected me with you, and I'm indebted to him too. And the presidents of ICAP, SAFA, and other officials, as well as respected speakers. My title here is that, without wasting time on other formal things, I would like to directly go to the issues on internal controls and AML CFT, particularly in relation to accounting professionals and their services, whatever they provide. I would briefly, how I would like to go is that I will briefly I would like to briefly start with some of the generic issues and go to the specific one that are related with the accounting professionals. So what I will do that I will go to accounting, the principles set by FATF, and who may be the AML CFT players in the country, and what are the building blocks in the AML CFT metros, and what roles the accounting professional should perform to undergo, and finally the prospects and issues that we might have. This is how I would like to go briefly and then short. As we all of us know that, and the chair also delivered in his speech, that FATF has its recommendation issued in 2012, and it is still the FATF is still revisiting it and updating it. And some of the recommendation out of 40 recommendations some of the recommendations are directly related with the accounting professionals, such as recommendation 22, 23, and 28. 22 and 23 are about how accounting professionals should perform their AML CFT roles, and 28 is about how government authorities or regulatory or supervisory authorities should conduct supervision of accounting professionals. At the same time, there are other recommendations that are relevant to accounting professionals, such as risk assessment and risk-based approach, cooperation, coordination, international cooperation. Such kind of things are also there. Some of them relate to the professional, some of them relate to the supervisor of the accounting professionals. And at the same time, when a country is assessed, the country is assessed in two parts. One is technical part that we just saw before, and another is effectiveness part. In the effectiveness part, we have direct relation with the preventive measures and as well as supervisory measures. Now I would like to go, I'd just like to show this slide to see how AML CFT system works in a country. There should be a legal basis first. There are financial institutions and designated non-financial business and professional institutions like our professionals, like accounting professionals. There are regulators, there is FIU, there are numbers of investigative authorities, there are prosecutorial and judicial authorities, and there are policy bodies, as well as international financial system, which all these compose, all these elements or all these structure frame AML CFT system in the world, both in national level and international level. However, what I would like to stress that it is the reporting entities, it is the accounting professional, it is the banking professionals, it is the insurance professionals, it is the real estate professionals or business person. They really breathe into the system. We are there, the components are agencies, but the base, the foundation of the system is, if you ask me, are the reporting entities. The accounting professional are one of them. Now I'd like to go discuss a bit about what are the AML CFT building blocks. The earlier presentation also touched upon these things. I would just briefly like to go on this. Any accounting professionals, what kind of services it provides, should adopt risk-based approach. Because AML CFT is a demanding subject, demanding regime. If you try to have every possible thing, if we try to apply every possible thing to all, I think we cannot run our profession. Sure, that This has been understood globally. This has been understood nationally. So this has been reflected in regulatory directives. This has been reflected in national laws. So an accounting firm or a banking institution is required to conduct its institutional risks and focus on those areas where there are high risks or large, medium risks or medium high risks. And the building blocks also require that there should be a policy, there should be a procedure of an accounting firm that address the risk-based approach. Means, suppose in my country, a particular business sector is quite vulnerable to money laundering, that policy and procedures should capture that. And that risk-based approach should have touched upon that, discussed that, analyzed that, and stated that this sector is vulnerable for money laundering and terror financing because of these things, because of these statistics, because of this logic. So risk-based approach means, first of all, we have to conduct our institutional risk assessment based upon national risk assessment, sectoral risk assessment, or other risk assessment. And the findings of this risk assessment should be reflected in the policy and procedure of an institutions, in the CDD measures, in the monitoring measures, in the reporting measures, in the compliance program, in the record keeping, in the capacity building, in the review and appraisal of whatever a firm is doing. So this is what mixed AML CFT regime for reporting entities. This may be a bit different for regulator, a bit different for investigation agencies, but I would like to touch upon these things in relation to reporting entities only. Now, while going to the core issue given to me, the accounting professionals have their traditional profession of accounting and auditing globally. So the auditing function is one part, and the role assigned by FATF standard is a bit different. It does not mean that an accounting professional should work as a reporting entity while conducting audit function, while carrying out audit function. So what FATF has said, or it's limited, that if any accountants or any auditors or any accounting professional is engaged in the preparation of, in the transaction of say, when they prepare for or carry out a transaction of the client concerning the following activities, means if an accountant is involved in buying and selling of real estate on behalf of his customer or client, then at that time, the accountant is supposed to be reporting entity in AML CFT perspective. If it is doing audit function, that is a different thing. That is a different role. That is a different capacity. There are the norms and guidelines for audit function that have been traditionally developed and growing, you see, expanding more and more as per the challenge. So if an accountant is engaged in managing of client money or securities and other assets, if it is engaged in, he is engaged in the management of bank or saving or securities of accounts, if it is engaged in the organization of contribution for the creation, operation, or management of legal person or companies, if it is engaged in creating or operating or management of legal person or arrangement or buying or selling of the business, if an accountant, by virtue of its the license it has obtained from the regulator or government, carries out such kind of activities, at that time, as per the FATF recommendation, should work as a reporting entity. For auditing, there is a different role, which we will be discussing later. So FATF is covering only this part as a reporting entity or reporting professionals or DNFBP. So that is what I would like to focus on here. We should not be worried for so many things. As a reporting entity or as a professional engaged in, as an accounting professional, you see, engaged in such kind of activities. Now, I would like to separate these two functions. One, we accountants, we lawyers are working as reporting entity or reporting professionals as per recommendation 22 and 23 of FATF recommendation. In that context, we have to comply with the building blocks of AML CFT that I presented before, and other respected speakers also presented on that. But the issue of internal control comes here, that how we are internalizing that function within our firm. What kind of policy we have framed, what kind of procedure we have framed, what kind of staffs we have hired, what are the measures of hiring ethical staffs, what kind of ethical grounds we have maintained over there. Or it also depends on the size of accounting firm. If the accounting firm is like KPMG, the risk assessment report it produces maybe a document of voluminous pages. If there is an accounting firm having one single accountant and limited to domestic business, domestic services, the risk assessment may be different. So risk assessment depends on the size of its business, its services, its makeup. And at the same time, who are the persons, who are the bodies, who are the companies, or whatever we say, we are providing the service. This means our customers. Is our customer a business person? Is our customer a politically exposed person? Is our customers are those who have been suspected for tax evasion or terrorism? Or there is someone behind who is in fact running or trying to run or establish the business? If an accounting firm has such kind of instruments developed within it to look after the issues, then we can say that it is properly working or in line with the expectation of measures under internal controls. That is what I would like to focus here. At the same time, if an accounting firm is a big one, provides multinational services, at that time, we should also grasp the risk areas of that particular country. Just for an example, though it is related with the lawyers, the Panama paper. The Panama paper is famous everywhere. It is a matter of discussion. It's an issue for the world because the lawyer was providing service to establish company or to work as an agent of certain person or certain companies, or running the management of that companies. And in fact, it was hiding the real person who was the actual owner or beneficial owner. So what kind of instruments we have developed within our firm based on our scope of business, size of business, nature of business, or area where we are serving? If we have that kind of capacity built up in documentation, in the knowledge of board of directors, in the knowledge of our skill of senior management, in the knowledge of our skill of the employees, we have trained so, then we can say that our internal control system is quite effective. So that is what it expects. If our business firm, our accounting firm is multinational, suppose that's in Nepal, that's in Pakistan, that's in India, that's in US, at that time, what kind of mechanism, measures in a top level, in a multinational level, it has developed so that a money launderer or terror financer or a criminal cannot abuse or cannot try to abuse we people or our firm, so that we do not be victim in the future as a criminal or associate of the criminals. This is what, in fact, is expected in internal control measures. That is what I would like to focus first. Then I'll get back again to the slide. What I would like to stress upon here is that in the internal controls, we should be very cautious whether our firm has the existence of AML CFT building blocks in a visible manner or not. Number one. Number two, if we have those building blocks in visible form, are they in operating status? Are they really working? Does our staff know that? Does he have skills or instruments or idea to implement that effectively? Does he understand who is beneficial owner? Does he does he have a kind of sense that this guy, the behavior of this guy, this person who is asking service from us, say, has connection with the terrorism or terrorist activities? So if this is systematically inbuilt within the function of that accounting firm, at that time, we can say that there is very good internal control system. And we finally, whether this is effective or not, it depends on what, by doing our own, having so many documents and trainings alone does not establish effectiveness. Effectiveness is established when a regulator, FIU, and other people, feel that you have contributed to AML CFT system. Suppose your firm has not been, attempted by, criminals have not attempted to use your firm as a vehicle, or you have identified such kind of criminal elements or attempts of the people, attempts of those kind of people are notorious people, and you have reported that to FIU a suspicious activity or suspicious transaction, what kind of name is there in the country. So regulator is satisfied by looking after entire system in place. FIU is satisfied because it's for the geography, it's for the economic size, it's for the money laundering and terror financing and other criminal activities, whatever reports it has submitted, the number, the volume, the quality, the quantity, they are satisfied to our context, because we cannot do everything, but we can do the best. We can try the best. So if that is visible, then we can say there are good internal control measures within the firm. So the objective of all these things is that not to have our firm, we people, abused by the criminals. Someone comes to us, approaches to us. The purpose is to establish a company, but we suspect that the money that they are trying to invest in that company has come from terrorism, or they have a desire, they have an intention, hidden intention. They have intent to pass that money, to transmit that money, or to supply that money in the form of business, in the form of company, in the form of charity to a terror organization. Or a corrupt guy having intent to establish a business entity through us to hide his corruptions, to launder its money. So if we have that kind of eye to a certain extent established within a firm, then at that time the FATF requirements of internal controls within the accounting firm is supposed to have been fulfilled. So this is what I would like to stress upon one side. Another side is when accounting professional work is auditors, then they have additional.
Sorry to interrupt. If you can conclude in next.
Right. Sure. Yeah. If they are working as auditor, at that time, if they are auditor of reporting entity, how far reporting entity, suppose bank, are complying the AML safety measures effectively, that's their another role that I would like to focus. Finally, Nepal, in the context of Nepal, we have AML laws, regulatory directives, AML policies, and national risk assessment. And there are some challenges we have felt, though we have found our ICANN, that's the regulator for accounting professionals, very active. They have issued directives to accounting professionals engaged in such kind of activities that we discussed. We have found some major problem is some of them are that there is no clarity in understanding, and there is a problem for us in the integration adjustment of accounting professions and mixing AML norms within that. And another problem that we have found is that case versus suspicious activity. So what is case? What is suspicious activity? So this has been a big problem for us, but we are in regular discussion, and ICANN has been doing a lot of things in that regard. So finally, I would like to thank you. for giving me this opportunity. Thank you, sir. Thank you, ICANN, and thank you, ICAP, for giving this opportunity. Thank you very much.